Hello and welcome to It's Not Your Parents' Basement, Denver Metro's only first-time homebuyer show. My name's Olivia and Christian.
And I'm Christian Durland.
Thanks so much for being with us today. And now today, the burning topic is interest rates. We all know that everybody's talking about them. Are they low? Are they going lower? Are they going higher? So we want to give you lots of good information that you can use to determine if right now is the best time to buy for you. So Christian, what's going on with interest rates these days?
Well, like you said, when it comes to getting a mortgage, when purchasing a home and obtaining a mortgage, one of the most important things, if not the most important things, is what's going to be your interest rate for the amount of money that you're going to use to purchase the home, right? Like you said. So interest rates right now, they're sitting in a range between about 3.5% to 4. And that's what I always like to say. People say, well, what's your interest rate? It doesn't really work like that. Us mortgage lenders don't set interest rates all the way from, it's like we don't open the doors in the morning and say, here's our interest rate today. We are going off of what Wall Street is doing. Interest rates are based off of mortgage bonds, and so investors are basically controlling interest rates in terms of how much investment is coming into mortgage bonds and going out of mortgage bonds, how it relates to the stock market, how it relates to our economy and the world economy at that. So because we're still in this, slower economy, I guess, or, the world economy is kind of slowing down, they're saying, interest rates are remaining low. If the economy was to pick up and things were to get really hot, then you could expect interest rates to go higher. Okay. So that's kind of really how it works. It's all based on economic factors more than, hey, my company or Wells Fargo or Chase or anybody opening their doors in the morning saying, here's the interest rate for today.
Okay. So, good information, and that may have been a little overwhelming, though. Now you're thinking the world economy and what's going on in Europe and China and how does that affect me? So we want to kind of drill down into some more basic questions that'll affect you personally. So first off is loan type. Is there a difference in interest rate across the different loan types? For example, FHA, conventional, or VA?
Yes, there is. So the government side of lending, which encompasses VA, Veterans Associate, FHA, and USDA, which doesn't apply here in the city, but the government side of lending, those interest rates are typically the lowest as far as mortgages are concerned. Government loans are backed by the full faith of the U.S. government. So the investors, again, who invest in mortgage bonds feel that that's a safer investment, and therefore, because the government's backing it up, and therefore those interest rates are going to be a little bit lower. Conventional mortgage rates are a little bit higher. And conventional mortgage rates have what we call more tier pricing, where they're a lot more sensitive to credit score and other things specific to the transaction. So.
Now, what about credit score? If you have a bit of a lower credit score, are you going to get dinged with your interest rate?
On conventional mortgages, yes. You're going to see more of a, if you have a lower credit score, you could see a higher interest rate. On FHA, or the government side of lending, there's not so much of that going on. You could still have a pretty, towards the minimum credit score that, say, FHA requires, which can be anywhere between 580 and 640 depending on the lender. You're not going to see the interest rate raised that much on people with lower credit scores. Conventional, you can't even get a conventional mortgage with, lower than a 620, and at a 620, you're really going to get dinged on the interest rate hard. So.
Okay, so now the next question would be in terms of money down. If you're putting minimum amount of money down versus, let's say, 20% down, for example, is your interest rate going to be different?
Not so much. On conventional, again, it's pretty static. Between putting 5% down and putting 20% down, the interest rate stays about the same. If you put 3% down on a conventional mortgage, the interest rate takes a nice little jump upwards. But again, FHA, it really doesn't matter. You put 20% down or 3.5% down, which is their minimum down payment requirement, the interest rate doesn't change whatsoever.
Okay, good to know.
Yeah.
Now, I'm sure you're probably online and you're clicking around and you're seeing what's popping up online for interest rates. Now, the big question is, if you click on a bank's website and you see an interest rate quoted for that day, is that going to be the interest rate that you get if you apply with them? How does that process work?
8 times out of 10, no. So that's the difference between, shopping for you know, say an appliance at Sears and Lowe's has it for a lower price, and you know, it's pretty easy to go, well, I'm going to go to Lowe's because they have a lower price, right? And transactions done and over with, and you save some money. Interest rates, again, because ultimately the interest rate is determined by what's happening on Wall Street, they can change hourly, weekly, daily, monthly. I mean, they're constantly in flux and changing depending on what's happening with the bonds on Wall Street. So, you know, if a lender online is advertising interest rate, that's one of the more frustrating things in the mortgage industry for us loan officers, is because potential buyers like yourself are saying, well, you know, Capital One says, you know, that their interest rate is you know, X, and Christian, you say your interest rate is this, and you know, I could end up being lower actually depending on the day, or they could end up being higher depending on the day. So I know that answer might not make sense all that much, but the short answer is no. I mean, just because they're advertising a rate doesn't mean that you're going to get that interest rate. There's you know, a number of variables that go into making final determination of what your interest rate will be. Loan type, credit score, how much money you're putting down, type of property. Is it a condo? Is it a single family home? All of these things. You know, what's the loan amount, the size of the loan? So it just depends.
So that's another good question. Does property type matter? If you're buying a condo, are you going to actually get dinged with a higher interest rate than if you're buying a single family home?
Typically, yes. So a condo is considered, you know, from a lender's perspective, a slightly higher risk type of property if they end up, you know, having to foreclose and owning the property. So yeah, the interest rate is typically a little bit higher on a condo.
Okay. So. Well, we hope you've enjoyed this show. I know this is interest rates always such a confusing sometimes conversation for lots of people. So we hope we've given you some information that's easily digestible.
Yeah.
So thanks, Christian, for all the good info, and always remember,
you'll never forget your first time.
Thanks.